COVID actually was the most amazing thing for our investments. Like every single company in the last 6 months has been like increasing sales from 25 to 50% month after month. The sales cycle has been reduced from 9, 12 months to 3 to 6 months.
We're in the middle of an entirely different model. Look at us now today. 5 months ago, we would not be on a Zoom call doing exactly what we're doing today. Think of the opportunities for the companies that had pivoted that are less vulnerable because they've digitized their economies, because they've digitized their platforms.
That every single investor needs to bring value to the table. And if an investor, regardless of the category, cannot bring value to the table, they will be eventually ejected. So actually that's happening.
Okay, hi everyone. Thank you very much for joining us tonight. So our event is related to the topic AI, AR, IR. What's next? Sorry, it's not so easy to pronounce. So the first part of the event will be investors panel. We will discuss a few topics on the latest industry trends. The second part of the event will be a pitching session, few startups, and all investors who got the score sheets. We would be very grateful if you can fill it in during the pitching session so that we can give our startups a feedback. And so first I will introduce myself and my company. Let me share screen.
Elena, can you send those sheets in the chat here? Because I don't have one in front of me and I need to print it out.
Okay, great.
How do I fill it out? Can I do it electronically or not?
I will send you an email right now, okay?
Okay, thanks.
So Astra Global is, one moment, I think I need to do something like, yes, something like this. Yes, Astra Global is a global company introducing investors and high potential startups. And we are working with both sides of the ocean, US and Europe, and we want to try our best to connect both sides of the ocean, startups with investors, investors with investors, and be like a bridge company to unite the world. Yeah, so basically what we do is we help startups to do the strategy of approaching the right VCs, of choosing the right VCs to approach, of evaluation if they're ready at all for VCs or not yet. And then we also can help startups with structuring advice, since we have a lot of experience with deal structuring and legal experience. And this event we do together with Gold Ventures investment company. It's an accelerator program based in Israel actually, and also having partners worldwide. They help us with startups, with selection of startups, and they can also help to find a capital at the European Union level from the public sources in order to make VC investments more profitable and less risky. And what I want to do now is I want our panelists to have 1-2 minutes to introduce themselves, and we will start with Chris Fisher.
Hello, hi. My name is Chris Fisher. I'm based in Hong Kong, working with a Series A focused venture capital fund called Click Ventures. I'm a managing partner at Click Ventures for about 3 years. We look for companies that have some form of network effect, preferably several different kinds of network effect, which leads us to investing quite a few companies involved with AI because of the effect related to data and how it improves AI. yeah, I guess that's my intro.
Thanks. Gilad?
Hi, everyone. So I'm a partner in Target Global. We are managing around $1 billion in Europe and Israel. We have early, late, and mobility funds. In the AIARVR space, we have other pockets, several companies in that space. I was heading the board of Plessy Semiconductor that recently was announced.
Dude, it's
Significant deal with Facebook in that space. Israeli, before that I was involved in 2 companies. One I sold to Apple and one to Google.
Cool. Ingrid?
Hello, everyone. Thank you for inviting me. Today, I'm representing the World Business Angel Investment Fund. I'm one of their senators. I also am faculty in the entrepreneurship division, and I'm looking forward to meeting everybody during the pitch.
Thank you. Gary?
Yeah, my name's Gary Fowler, and I'm a serial entrepreneur and 15 companies. And I'm also an investor. We have about a $100 million fund, an SPV, creating another $100 million fund. Although GSD is so what we have is a venture studio. That's one of my primary focuses right now, working in areas of artificial intelligence, semi-supervised, unsupervised, and helping those companies go global. So I've done a NASDAQ IPO. You know, I've raised hundreds of millions of dollars. I'm looking for the best AI companies in the world. We jump into them and bring our team in and help those companies go to the next level. So Click Software, which I talked about earlier, that was sold recently, was one of the original companies I was involved in. Eva.ai, I grew to about a $600 million company, actually a little less than 3 years, with David Yang from Russia. So no, we're looking for incredible companies, and I'm also an investor.
Okay. Yash?
Hi, everyone. My name is Yash Hemaraj. I'm a partner at BGV, Benhamou Global Ventures. We are an early stage enterprise focused venture firm. We are based out of Valley, but we have an office in Israel as well. What we do, we invest in early stage seed and Series A companies, companies that are built out of innovation hubs like Israel, France, India, etc. Help them make a transition to the Valley. So we are a cross-border firm. All of us in the firm have been operators in the past. We've built companies, Ficom, Palm, and several startups. We've been investing for over 15 years. And we are investing in what we call the 4th phase of enterprise innovation, what we call Enterprise 4.0, which is a combination of AI technologies, but also combining them with workflow automation and having unique data sets to power both of them. So we have about 30 companies in our portfolio right now, and about 18 exits. And most recently, we also had an IPO on NASDAQ. So again, very active with our portfolio companies, and have several companies that are in this AIARVR and AIARVR trends. So I would love to participate in this discussion today. Thanks for having me here.
Okay, great. Henry. Where is Henry?
Hello, everyone. Yeah, so quick introduction maybe to myself and Amplifier. We're very much a specialized VC, so we invest purely in what we think of as the supply chain. So in layman's terms, kind of movement of things, or as we like to think of it, sort of back-end operating system to the world economy. And we've been investing now since the beginning of 2019. So we're a fairly fresh-faced fund, single LP private vehicle, and the small portfolio, 4 or 5 companies that we built really fall into that space of logistics and mobility primarily. Though a lot of it is around the areas of deep learning and AI and smart enterprise applications, like predictive freight or performance optimization. We do a fair amount in the area of autonomy, both for transport and robotics, but specifically more often than not in off-road geofenced applications. And again, in that kind of last mile mobility. So we're all aware, obviously very topical, but the Amazon effect and the pressures we're feeling in last mile fulfillment or congestion. A lot of the solutions we look at are addressing the challenges in there. And last but not least, the fintech layer within the supply chain, where there's about $1.7 trillion or so of effectively missing finance in the system today. So we look a lot at alternative lending platforms as well. So very much have that sort of specialized focus. But it is an area, of course, that touches all of our lives and has a very significant impact on both the global economy, but also our environment, and faces a number of significant challenges. So thank you very much, Elena, for having me today.
Oh, great. Thank you so much. Sergio.
Bonjour, hello everyone. So I'm Sergio from BCF Ventures, joining from Montreal, Canada. As most of you must know, Montreal and Canada is pretty much the hub for artificial intelligence. Like most of the deep research in AI that has been developed worldwide has started in Canada for the last 50, 60 years. We have the top researchers in AI, Yash, Benhamou, and so on, that has been the PhD professors, instructors for many of the top researchers right now working in top organizations. BCF Ventures, we're a Canadian corporate venture capital fund associated to BCF. It's a $100 million each revenue corporation. We focus at the seed stage in enterprise software. We invest in legal technologies, supply chain, and health technologies. For the upcoming, I would say 2 years, our focus would be in artificial intelligence and supply chain. So actually pretty much in the same way that Henry. We have recently established a partnership with the Scale AI, which is the Canadian supercluster in artificial intelligence and supply chain, sponsored by 500 Canadian corporations and the Canadian government, with a budget of close to $800 million. So we partnered with them and we started a project that will be fostering the relationship between startups in supply chain and those corporations to establish paid pilot trials in Canada, so we can foster the innovation in our country, and try to scale globally these kind of corporations and startups. So thank you for this invitation.
Great. And Francesco.
Yeah, hi all. I'm probably like late to the party because I just got brought in literally like yesterday. So good to see you all. Francesco here from London, working with Balderton, which is a VC fund based in London that invests in European companies, usually like a Series A level or even like seed stage, honestly. We've been, well, we actually are like pretty generalist. So we've been investing like in several different companies in different markets for the last 20 years now. We just launched our new fund 6 months ago. So we've been like investing with this new fund in probably like really like 7, 8 companies, 3 or 4 of which during the pandemic, which has been like pretty good for us. On me specifically, my PhD was on machine learning and finance. So I started working on sentiment analysis for financial markets before joining, like the VC industry overall. Then I joined like a VC fund in London a few years back, and I never actually left this ecosystem. So right now I'm mostly in charge of all the data and research activities at Balderton.
Okay, great. Thank you very much. And I would like to introduce Richard Ward from McKinsey & Company, who will help me with moderation of the panel. Richard, hi. Please shortly introduce yourself and start the panel. Thank you so much.
Hi, everybody. I'm Richard Ward. I'm with McKinsey. I lead our enterprise VR, AR, XR practice, but I also happen to run our data science team for oil and gas. And so I kind of have, as with many of you, a foot in both worlds, if you will. You know, I think one of the interesting things that has been happening, of course, is this idea that you know, the COVID-19 situation, I don't think was in anyone's business plans at the end of last year. And so what we have is certainly a disruption that has happened to the larger global economy as well as the startup economy that has happened. And I think one of the interesting questions for those that you know, for the startups that are existing and the investments that you have, as well as those that are now in this period of seeking further investments and trying to work in that, is this question of whether under Corona, you know, are you finding that companies and the investor community itself see this as an opportunity to either lean in? So our investment thesis was correct. So, you know, Henry, obviously on the side of the logistics things, the ability to move things to greater logistics instead of hands-on delivery is going to be an opportunity. Is it an opportunity for something for the investment thesis is correct, but the situation is one in which we should lean back, perhaps conserve cash, conserve resources. We think this is the right thing, but we need to wait it out a bit. Or is it entirely possible that everything has been destroyed and it's time to pivot, right? You know, and I think that one of the questions that I would ask is whether these, you know, in your experiences, what you're seeing, what kind of a relationship are you seeing? What kind of mix of these reactions are you seeing? Is there an overall trend, or is it very kind of specific to each company? Henry, I'm going to pick on you first because, of course, I picked on you first.
Absolutely. Well, I think, you know, to some extent, supply chain is very topical right now for obvious reasons. You know, we think this has been a massive space for a while, but we've seen a lot of funds, certainly the generalist funds, you know, Balderton and others who are fairly agnostic, you know, moving in this direction in the last few months. And I think that's because, you know, we have a very clear and very kind of deep drilled investment thesis, which identifies really opportunities based on a couple of things. One is the readiness of technology to solve a particular problem, and ideally a very large pain point where the customer therefore is kind of moving through accelerated adoption curves and at the same time requires limited transformation in terms of adopting that technology in the first place, right? When you get that mix, you can overcome a lot of the difficulties in B2B of actually scaling these technologies in a meaningful way for a venture capital fund to achieve its returns, right? So within that kind of thesis, we've seen already post-COVID a number of themes that were maybe we thought were probably ones for the future, i.e. slow burners, slower to deliver return, accelerating in front of us. I give you a couple of examples. Take IoT, supply chain traceability. Everybody wants it, everybody talks about it, nobody wants to pay for it. And so, you know, some of the more cutting edge technologies in like system on chip or printed chip technologies where you can start to trace on a product by product level, suddenly there's a kind of ROI attached to that where your supply chains are fragmenting and you need new agility, whether you're a shipper or a carrier, to justify kind of going into that space and investing into it, all the necessary kind of software and AI that can underpin that. Or take, you know, we just recently last week closed a deal with Micropsy Industries, very much on the kind of deep tech AI side of robotics. You know, there have been a number of players that, you know, Covariant recently came out, Vicarious and so on out in Silicon Valley who've been trying to address, you know, how do we get robotics to actually operate in a way that is both agile and kind of adoptable at scale in both manufacturing and logistics. And we always thought that was a bit of a slow burner, that like break point that came post-COVID where whole production lines were shut down, where warehousing systems came under massive pressure. You know, suddenly there is a very different speed of adoption and kind of readiness to accelerate. And that means one of two things. One is that suddenly certain elements within robotics autonomy become much more viable investment opportunities, and we're actually putting cash to work on those opportunities today, even given the economic situation, and that, you know, they can still thrive despite of the economic situation. But also we've, you know, what I think we've also seen is that they really, the way in which you're investing, you need to be a little more aggressive on the technology in some respects. And previously, certainly in this B2B environment, you can often say, well, let's go for the low hanging fruit. Let's find a solution that works for the truck driver or works for the, you know, the warehouse today and that they're going to adopt and play with. And actually you can start to move more towards those edge cases as well. So those are some of the ways in which, you know, already certainly things have changed, but actually changed in a way that means we're still can be, you know, happily pursuing and putting our money to work in those opportunities.
So if you kind of say that, like, you know, obviously people in the current world don't really want to touch things. Certainly the thing they don't want to touch is other people, which, you know, Ingrid, given your focus on that kind of the healthcare area, how are you seeing the companies and the opportunities there? Is this a lean in, lean out, or pivot situation for the sector you're looking at?
Definitely for healthcare, I've seen a lean in for clinical trials. That's by far the biggest industry, specifically medical devices, of course, like was already mentioned. And then anything that has to do with R&D for new vaccines, of course, new medications, same pattern. Those are definitely, everybody is super interested in those. Now, for those, actually in the first quarter, we've seen more venture capital investment than ever in the history of the industry. So I would definitely say clinical trials comes first. The other industry where I see AI having a higher interest is as well in genomics. I focus a lot on precision medicine, and there I can say we've seen tremendous lately improvement in interest and understanding of how it could expand. Also in the combined power of blockchain and AI, which before everybody stayed away from, but now I've seen much more interest and again, willingness to invest in hybrid technologies. So if you had to rank them, definitely clinical trials, pharma, and then precision medicine solutions, which involve multiple categories.
All right, excellent. And Sergio, you know, kind of looking at it more horizontally on a broader base from the technical base, are you starting to see as a result of kind of the COVID thing that there's been, you know, a series of kind of like the core technology elements around AI that you're seeing that have been kind of like accelerated? Obviously, you know, Zoom has leaned into the Corona problem, right? As an example. Or have you seen there's kind of a pivoting that people are saying, hey, we had a general kind of technical capability. Now we see a Corona specific opportunity and we'll pivot the business plan towards that. What are you seeing kind of, but you're sort of a level down on the core technology sector. What are you seeing?
Yeah, so the core of our investment thesis was to, you know, invest in enterprise software. And which mean the digitalization of legacy processes. You know, most of these processes in industries and corporations are paper-based. So when you install a software, and in this case, you employ technologies such as like artificial intelligence to automate the process, you are creating some kind of modes. Pre-COVID area, what we notice in our portfolio is that, you know, the time to convert a corporation to a client was very long. We're talking about 9 months, 12 months of the sales cycle for conversion, because we had to educate, you know, the corporation, the people working at corporations that were very, like, people were afraid of like employing these kind of new technologies. What ended up happening, at least in our portfolio, is that COVID actually was the most amazing thing for our investments. Like every single company in the last 6 months has been like increasing sales from 25 to 50% month after month. The sales cycle has been reduced from 9, 12 months to 3 to 6 months. Now it's in the area where kind of these corporations, because everyone is working at home, you know, future of home, now they need to install these kind of technologies that are going to be digitizing the way they work and, you know, bringing more efficiency, but they need it now. So to respect, are we pivoting? No. As a reaction, I think it's kind of easing up the process to implement this kind of new technologies at the enterprise level. And as an investment thesis about changing or pivoting the thesis, certainly not. Like, this is the best time ever to invest in enterprise software and with AI.
Well, awesome. At least somebody's having fun. You know, I think you know, another question that's going to come up, and Chris, perhaps you can lean in on this, is obviously there's a geographical disparity on the timing of this problem. Are you seeing that there's an element of where perhaps China and the Asian area, which has really kind of been hit first and come out first, you know, fingers crossed, have been able to kind of like figure out the recipes for these things and now are better poised to perhaps, you know, launch out into the, you know, the United States and Europe because we've already solved the problems in Europe, in Asia. Now we are, you know, we already have the lessons ready to go. Or are you seeing something else?
Well, so China is and has been for a long time playing its own long game in the whole AI space. So there's been quite a lot of serious commitment to developing AI technologies and using it all throughout their various platforms like WeChat and in their ecosystem there. The COVID situation, I don't see that there's a huge impact there.
So I think Chris may be having some signal problems. So I'm going to jump over to Gilad. I know that, you know, you've got kind of like this enterprise hard technology background, you know, with the semiconductors and things of that nature. Are you seeing the, you know, a similar situation? Because of course, hardware and those types of things are a much longer wavelength for development cycles. Is it just a case of like, look, you know, we're kind of maybe conserving cash a little bit or just blowing through because we're all waiting for this to finish? Or are you seeing a different type of thing? Or am I oversimplifying your area?
So a few comments. One is, in general, we as a fund, we try not to change our strategy because of, you know, one-time event. We're still trying to look on the fundamental. Is the team is good? Is the company is good? And maybe now it's the right time to invest in things that were hit very strong, like travel, and not necessarily to go to the places that everybody go. So this is one comment. Specifically about hardware, we closed a very significant deal recently with Facebook on a company in UK and in the AIARVR space. And we see that the appetite of the big five in the US is as strong as ever been. Maybe at the beginning they were hesitating, but you see now the M&A groups of all those big five are seeing it as an opportunity to grab technologies outside. And I think if you will change your strategy because of COVID, regardless what you do as a VC, it might be a big risk. But what we see is that people looking on different fundamentals. For example, the team become very strong because suddenly you understand that you need a very robust team, even if the business model is strong, because when the company encounter problems, this team needs to solve it. Companies that were used to, you know, let's say mix between their GMV, ARR, pricing their company according their next 12 months forecast ARR or GMV, now they're becoming more rationalized. And those are the things that we enjoy seeing because then it means that we have more opportunities. But we are not necessarily saying this sector now is bad or that sector is good. We are just looking in every sector a very good company.
Okay. Gary, as we kind of like focus on the area where you have, you know, enterprise applications, HR focus, and those types of things. Again, it's the same question, right? Are you finding that either the different waves of startups are coming for seed, you know, A round funding based on what we had before because of the different problems, or are the ones that you have in portfolio, are they leaning in, leaning out, pivoting? You know, where are you seeing?
Well, I mean, think about what's happened. Look at what, and I remember 5-6 years ago when I first was asked to get on Zoom by Emergent. Look at what's happened in 4 months. 30 million people has now grown to 300 million participants plus per day. We are in the middle. I just wrote an article, by the way, on Medium about the digital transformation post COVID-19. We're in the middle of an entirely different model. Look at us now today. 5 months ago, we would not be on a Zoom call doing exactly what we're doing today. Think of the opportunities for the companies that had pivoted that are less vulnerable because they've digitized their economies, because they've digitized their platforms. So what I'm seeing is companies that have really grasped this, forget about COVID. this digital transformation was underway. In fact, McKinsey wrote an article, I remember from mine, 92% of the companies were doing their digital transformation strategies. This is just accelerated. So what I'm seeing is I'm seeing the companies come in, my EVA, right? So our business is dramatically up because of COVID. We do remote, using AI for remote workers. And we were doing it before, but it's just accelerated. So what I'm seeing those companies come in, and I'm looking for the ones that have not just, so there's a lot of talk about artificial intelligence, but I'm looking for semi-supervised, unsupervised, ladder networks. I'm looking for the right stuff, the grit. And when I find that, when they're coming in, those are the companies that I believe this is the best time it's ever been for those companies to go to market. And our thing is, right now, I have a security company, AIARVR, facial recognition security company. Business is booming.
Cool. Yash, any thoughts on this? You kind of heard everybody else, and you certainly have a very enterprise focus to the whole thing. Are you seeing an acceleration, a pivoting? What are you seeing amongst the, kind of out there in the area that you're looking at?
Great. So primarily what we're seeing is broadly classified in 3 buckets, right? So one is companies that are seeing tailwind accelerations right now. Those are companies, we have a lot of companies in the whole continuum between marketing, sales, and customer success. And today you look at any company, any industry, at least 50% of their OpEx is going into sales and marketing and customer success. And today what has happened, like one of the panelists responded, we're all sitting in Zoom calls, not in physical meetings. So digital, people are not going to events, people are not going to trade shows. Digital marketing is the only way to reach your customer. And existing customers are the best customers, are the best source for kind of preserving your revenue base and accelerating that and upselling that, especially in the SaaS world. So we have seen massive acceleration in companies that are focused in this digital marketing, sales acceleration, and customer success space. On the headwinds side, we have seen some companies that relied in personal interaction. To give you an example, we had a company that was primarily building robots for taking an entire kitchen operation and making, like, for example, food serving and preparation, etc., completely automated. Temporarily, these were being deployed in college cafeterias and university cafeterias, etc. Temporarily, those are suspended. But what we do see is a next wave of opening up, because while we are all there in this kind of Zoom medium right now, but I don't think humans are fundamentally built for personal interaction. And VR is one way to recreate that personal interaction in the virtual world, but it is not going to sustain. There's a thing to be said about human touch. It's about the personal feeling that you sit across a table, exchange that ideas. So it's going to come back, but it's going to come back with a change. For example, I'm talking about this food robotics company. What we have seen during this COVID time is a massive pull from hospitals. Earlier, the deployment were in college cafeterias and corporate cafeterias, but now hospitals are demanding this because there are no staff that are now ready to go into a hospital settings, prepare food, and do it without any human touch, right? So this is where I think the existing companies, I don't believe in full pivots, but this is more of pivot in terms of your target market, where somebody which may have been number 2, number 3 in their wish list has gone up to number 1. And you see how Zoom has pivoted to number 1 in terms of any technology just over the last 3 months, right? So we see some changes like this, but otherwise, we do expect the world to return back, but there will be some fundamental changes that we expect to stay. So as a fund investment strategy, of course, we are continuing to invest in areas that are seeing massive acceleration. Supply chain, one of the analysts already mentioned, I think Henry already mentioned supply chain. We have been investing in those areas. We're going to look at how sustainable the things that the entrepreneurs were working on is sustainable in the post-COVID world. So it's going to be one extra filter that we will add, but still, the fundamentals remain the same.
Excellent. So Francesco, I left you last on purpose. So don't feel like you were neglected. So Francesco, for those of you who don't know, he kind of is an analyst researcher who covers all the sectors and looking at all the things. So I mean, you're sort of our 100,000-foot guy. How do you see these things, and what do you see like the different sectors either rising or falling based on what has happened?
It's a great question, Richard. And the reality is that if I simply give you like an answer based on let's say like data for the last like 3 months or so, it would probably be like an incomplete answer to some extent, because I think that like the worst thing that we can do as investors overall, I mean, we are not like hedge fund guys, right? And what I'm trying to say is that we are here for the longer term. So usually like our businesses last for at least like 10 years. So probably like the worst thing that we can do is to react to this type of crisis and make decisions like for the very short term. So of course, as someone was saying before, I mean, there's been like a few intuitive sectors that have been affected more than others. So like negatively, things like travel or hospitality, or those type of things are intuitively like the one that got crushed just like the last like 3 months. You don't have to think only to like the startup world, but if you look at like giant like colossal like Earths, or like all these guys that are falling in pieces right now for different reasons. There was like intuitive, like to some extent, while there are other sectors, like everything that is online. I can't remember who was saying that before, that COVID is the best. Yeah, probably it was Sergio, right? That was saying that COVID is the best thing that happened to his portfolio. I do believe in to some extent. I mean, if you are like a software guy, an online marketplace guy, this is gold for you, like generally speaking, and also like for healthcare and other things, right? I guess that instead of focusing on one specific sector or another, it would be relevant to spend some time and thinking about like two different things. One is, what are the consequences, medium term and long term, of this type of changes, especially like changes in behavior. So right now, like the major thing that happened that I think Gary was mentioning before is that, like, for example, everyone migrated to, like online calls or like Zooms or whatever it is, right? And that happened overnight. So potentially this type of shocks, what they've been able to do for us is consolidate the market towards like a couple of tools. So if you're like 3 years, you might actually explore like 20 different video call services. But when these things happen, you have to react pretty quickly. So you tend to consolidate around like a few services. So that's what like point number one. Point number two, as I was saying before, like trying to think in a more like structured way about like longer term question. So is, for example, I'm just like shooting like a random example, but if we are right now more used to work from home, how is like this thing's gonna affect the market in 10 years time? And I'm not like simply talking about, I mean, we work from so it seems like it changed like the team's dynamics. Yeah, good, fantastic. But how that affects, for example, like real estate. If in 10 years time, we don't need to have like offices anymore, is that really gonna affect like real estate companies that operate in professional space? And the final thing, since this panel is supposed to be on specific technologies, so AI, VR, and AR, I don't know if you noticed that, but probably you all did, but there has been, especially in AI, there are a couple of things that are a bit concerning to me. Yeah, probably concerning is the right word. One is, I do have an iPhone, as probably like many of you. And I noticed that since the beginning of the pandemic crisis, I wasn't really able to unlock my phone with Face, right? Like face recognition was working super well before the outbreak, and then actually like it stopped working because I was always like wearing a mask or whatever, right? Then eventually, after like a couple of months, it started working better. So I started reading about it, and I actually found out that Apple released a specific update for that. So like right now, your iPhones are able to see your face with a mask. And that was done on purpose. But eventually, if you think about it, this is not like the way in which facial recognition should work. I mean, you should be able like to accurately like design your face virtually and recognize like specific point of your face. If you actually cut your face in two, you are working with like the data points, which is probably not that accurate as it should be. So that's like one thing. And the second thing is that many AI models have been trained on the last like 3-4 months data, which, as someone else has said before, I think it was Ari at the very beginning, this is not like a usual circumstance. This is something that really happens like once in a lifetime type of thing. So the risk is that specifically for AI modeling, this might be like a very, very tricky point in time where we keep training our models on data that are not historic in that proper sense, right? This is really like a jump in the dark to some extent.
Cool. All right, so I have some lightning round questions, right? These, you get kind of 30 seconds to answer, all right? So the first question is, what is besides Zoom, what is the luckiest company that you can think of out of this whole thing? Henry?
Oh, God. Well, I had a long time to think about that one.
Lightning round, buddy. Let's go. Let's go.
All right. I'm gonna have to take a pass. I have to think about that one.
All right, Ingrid, luckiest company you can think of besides Zoom?
Instacart just became a billionaire because everybody ordered food online.
Excellent. Yash, what do you got?
So I would say, larger companies like Microsoft, Microsoft Teams has been growing like crazy. Their products are being used like multiple growth in multiple sectors within the same company. So Azure usage has been through the roof.
Perfect. Yeah, Francesco, what do you got? Luckiest company besides Zoom?
I'm gonna play safely and saying Netflix.
All right, Sergio?
Well, I'm Canadian, so Shopify. Shopify is the biggest time.
Chris, blow us away. What do you got?
The company that invents the vaccine, I would have to say.
That doesn't exist yet. That company does not exist.
So it has to exist today? I think it probably does. We just don't know which one it is.
Yeah, but you can't. Nobody can retroactively invest in it. So Gary, what's your best company that you think of?
Amazon. Zoom? Look about how many of us online are using Amazon today. I mean, it's completely dominated. It's made the world a safer place. So I think, from my perspective, Amazon.
Gilad, what do you got?
Yeah, I have to say that I don't say that it's the best company, but I agree with what was said here that Instacart, their numbers are out of the roof. I don't know. I'd never dig in their business model. It might be amazing, might be not, but it's just astonishing what they've done in the last few months.
Okay, Chris, you get a second chance.
Yeah, I would have to agree with the Amazon, actually.
All right. So here's another question for you, which is kind of a little broader, which is, given everything that's going on, the changes in the world, what you're seeing, what is the pitch you wish somebody would give you? What's the problem set or the market solution going after that you wish somebody would just show up and say, look, I'm going to build a thing that does this, or a company that does that. What is the dream pitch that you would see at this moment? We're going to go backwards this time. Gilad, you're first.
Yeah, I mean, if you can fly to the moon with $2, cost, it's a dream pitch. But I think no one solved till today the AR side, and not sure that it's a problem that should be solved. But I think a lot of money went into that, not only Magic Leap, and it will be interesting to see if someone truly able to solve it.
Gary, dream pitch that you wish somebody would walk in the door with today?
Yeah, so from my standpoint, it's artificial intelligence unsupervised with compassion.
Okay. Chris?
It's probably personal mobility, like drones, for people.
Sergio?
I will say kind of a supply chain operating system to easily deploy tech solutions on logistics for terrestrial, aerial, maritime.
Okay, Henry, don't you have one of those?
I've got a couple.
All right. Francesco, what's your dream pitch that you wish somebody would walk in the door with today?
I'm not sure about like a dream pitch, Richard, but I think it will be something related to waste, because if that's something that we learned in the last 4 months, is that all these deliveries and all these Amazon things actually like are piling up waste over and over. So that would be like waste related.
So kind of the unintended consequences problem. Yash, what do you got?
I would say, healthcare, somebody who can unlock the potential of what Epic and Cerner in the US are kind of withholding due to their kind of domination in the market. Somebody who can unlock that potential, definitely. And to answer Francesco, we just invested in a robotic waste management solution. Trash picking is not an aspirational job, but there's a lot of trash being generated, so a lot of opportunities there.
Okay, so to be clear, I only take a 5% commission on any matchmaking that happens. Ingrid, what's the thing that you wish a company would walk in today and pitch you, because that's exactly what needs to be done?
A fully virtualized hospital that is pandemic proof and solves not only this one but also all future pandemics, so that we would have AR, VR, XR fully enabled hospitals that can manage anything that comes our way.
Okay, Henry?
I'd look for something fully automated to optimize predominantly the ability to predict consumer demand. This comes back to Francesco's point on waste management, right? Huge amounts of consumption and overconsumption that ultimately have like 90% of the environmental footprint of any consumer company is in its supply chain. And the majority of that is wasteful uses of resources. So being able to automate that or predict demand is a huge problem to solve.
Interesting. So I think another question, and let me just ask a quick poll, just a raise of hands. Do you have an Oculus Quest? Okay. And that kind of is answering like one of the questions that I'm sort of seeing in the space, which is obviously lots of interest and enthusiasm about it, but the numbers are not there as rapidly and as quickly as people are looking for these things. Where do you see, kind of well, let me change this back to another question, which is, I think one of the fundamental investment questions for what you guys are doing and others is, do you see a difference, let's say during an emergency like this or a problem like this, a difference between the value in having financial VCs or enterprise kind of technology ventures VCs as investors in a startup? Or has it quite honestly had very little difference to what has happened to people? Ingrid, I'm going to start with you this time.
Yeah, my opinion on this is that it's not as dependent on that. It's more dependent on the market, the industry, the type of startup, the type of relationships, and I think it was referenced before. So I think the more nuanced details matter more than just what big category you're in.
Okay, Gary?
Sorry about that. Go ahead.
No, just a question. Do you see that, like during this, was there any difference in value between having, let's say, enterprise kind of tech ventures type investors versus financial VC type backing, or at the end of the day, money's just money?
I mean, the situation, you want to have people that have the expertise in your particular area, right? You want to have people that have that knowledge, that have the contacts, that understand what you're doing, because they're part of the team. So from my standpoint, absolutely, 100%.
Gilad?
In the startup I was involved, we had in each one 6 strategic investors, and we had American VCs usually. To raise money from strategic, it has its pluses and minuses. Usually if you bring one, you need to bring more than one, so you will not be categorized as a slave of one master. And it also depends which one you bring. The issue is when you come to a crisis, in general, there is the assumption that the corporate will be more busy in other fronts, while the VC will put all his focus to protect his investment. Especially if you need to bring very fast money, as mezzanine or safe or something like that. But again, there are corporate VCs like, Dell and Qualcomm and others that are doing amazing job.
All right, Francesco.
I tend to agree with Gary in the sense that I don't think that you can simply split VCs or like investors like in that way. It's probably, I think it was say related to the company or like specific market niches than like considering everything as one market. And eventually, money is not simply money. Money is money plus something else, right? So whether you had like that skill set, that's probably like what is relevant. I mean, skill set in that specific market, technology, and operational skill set.
And Henry, do you see a difference in these things in your sector? I mean, due to the real world requirements of what you do?
Yeah, I think I think a specialized investor who understands the market they're investing in and can kind of go with you on that journey. I mean, just for example, the adoption cycles, what size of rounds you should be putting together and when, how you should be looking to kind of work to speed up those sales cycles, all that kind of value add that comes with a certain amount of strategic insight. But, I think to Gilad's point, any strategic investor worth their salt also operates independently from the market that they're focused in. So you avoid any of those kind of conflicting interests or kind of dragging any of those issues along with you. And also, I think the scale of capital that you require, and this comes back to the central point, right, which I always make to every founder, venture capital is not for everybody. It really depends on the nature of the company you're building, how quickly you need to scale, and how you need to go to market. I've seen plenty of startups that only raised, a couple of million and ultimately, exited for hundreds of millions over a very short period of time, and others that have required significant long-term investment from investors with deep pockets to go deep into funding rounds in order to get anywhere near the kind of full potential of the product or exit. So there's a lot of variety there, and there's a lot of different types of investors who you need to bring together to support the strategic objectives of the company.
All right, and Chris, do you see anything like differences in your market as well around these types of things, or is it highly weighted one way or the other?
Not highly weighted. I would say there are in Southern Asia and kind of Hong Kong and south of Hong Kong, CVCs are not as structured and organized as you might find in the US or in Japan or in places like that. So those kind of investments tend to be more a wealthy family that's running a kind of a family business. It could be a public company, but it's a family business that they control, and something strikes the fancy of that family office and they invest rather than a structured CVC.
And Sergio, obviously there's a higher kind of like educational university research element side of the things that you're looking at. Do you see that the enterprise VCs versus the financial VCs, do they have different values and propositions in this environment, or is it kind of fairly normalized?
Well, let's start with the beginning that nowadays money is a commodity. You can pretty much a startup get funding from a financial VC, from an enterprise VC, from an angel, from a family office, from like anyone, the government. So money is a commodity. I think there has been I think especially thanks to COVID, a shift that every single investor needs to bring value to the table. And if an investor, regardless of the category, cannot bring value to the table, they will be eventually ejected. So actually that's happening. In one of my portfolio companies that we're finishing a round, the entrepreneur decided to purchase back, clean the cap table. Every single investor that was not helpful or never brought any kind of strategic help or anything, the investor just didn't want to work with them anymore. So we cleaned the cap table. So talking about the cap table, right? So I think that for enterprise or more corporate kind of VCs, because not only we act as an investor, but most of the time we're also clients. And we kind of care more about the product advancement, program enhancement of the technology, because we keep asking about patents, about IP, because it has to have some value. It's not just a nice pitch deck. We need to have some kind of touchable value on the company. So I would say that, yes, for more and more, I don't know the case in Asia. I know many Japanese CVCs that are really helpful, that I'm working with them. I think Gilad mentioned the amazing work that some of the American CVCs are doing. I think now is the time for corporations and enterprise VCs to jump and take more space and place in this kind of VC ecosystem, because we have something else that many of the financial VCs don't have, and that's the strategic value.
Okay. All right, so I have a final kind of lightning round question, and then we'll kind of wrap this up. The question is obviously something has happened in which there's a before and an after, right? And there's sacred cows and or assumptions from before, they're just truly no longer valid. And the most obvious one is the whole work at home or work from home question. If anybody's ever tried to sell kind of like remote capabilities or work from home capabilities pre-corona, you know, there was always a lot of like reticence on the part of management about whether the team will be effective or not and those things. So besides the whole thing that actually you can run large organizations in a distributed remote manner, what else have you seen has been something that previously everyone pushed back on or you know, would provide a lot of like friction on, that now it's just been proven that's not true anymore? So Henry, I'm going to start with you. Since I started with you at the beginning, you're going to be my start man again.
Well, I don't think it's necessarily entirely proven yet, but there's been an ongoing debate as to whether automation at the point of production within the supply chain would result in reshoring or kind of fragmentation away from the industrial basin of China and Asia. I think COVID has, you know, all the conversations I've been having with the heads of innovation, the CTOs and COOs at Henkel and Bosch and Daimler and these major European manufacturers saying, we cannot bear the risk any longer of having a dependence on a major point of output and production in a single geographic location or single industrial basin. So I think actually that kind of sacred cow may have, you know, finally we may start to actually see that fragment, and the conversation that's been going on for a long time may actually start to be realized in terms of actual strategy, and that'll have all kinds of ripple effects in terms of how the world works and where wealth or production or output as well as supply chains concentrate.
Cool. Ingrid, what are you seeing as a thing that previously was a problem, but now people are like, you know, that's not a problem anymore, let's keep moving?
I think making digital deals, being able to establish connections between startups and investors just globally. So I think it's going to cause not only shorter time span, like someone already referenced, that we've seen a contraction in the time cycles, but also the ability to maybe access globally that before maybe would have been just regional.
Great. Yash, what are you saying? Yash, sorry, confusing.
So in terms of trends, that is to say, especially in industries that are not undergoing digital, that were not on the bandwagon, I call it the late majority in this digital transformation. You could see that, you know, a lot of them wanted a bit of on-prem or a hybrid scenario. So that has transformed completely to cloud first or cloud only. So this whole cloud native has become completely accepted and wanted now. So in a lot of industries like manufacturing, MES systems, you look at an MES system, a lot of those things are on-prem today. Nobody uses a cloud. But even in those industries now, cloud has become a must-have. I mean, same thing around PLM, product suites, product lifecycle management suites, around ERP system. Cloud native has become a must-have today.
Great. Gilad, what are your thoughts? What's no longer a problem?
Yeah, two things that I don't know if they are not a problem, but they are becoming on the table. One, monitoring people's mobile phones for noticing them about they were near someone that was affected by COVID. I think in the past, at least like for my home country, Israel, it was a big no, and now you see opening to the idea that it brings also benefit to the general public. And the second thing is the ability for someone to take blood from his own vein at home without going to hospital and send it to test.
Okay. Francesco, what do you see as a thing that was previously true and a friction factor, but now is just really no longer part of the assumptions?
Do you want the easy answer or the longer answer?
Well, you've got a minute, so it's up to you, buddy.
The trivial one, I think, is business meeting and privacy. So, I mean, we are pretty comfortable, as Ingrid was saying before, like to do this type of events online, or, you know, even like meeting people online instead of meeting like face to face. So that's something that wasn't happening before. And also like giving up the privacy that we were used to have in order to have all the services that we need ready for use. But if you want to go a bit like a bit deeper into this like type of thinking, I think that like the main issue is that we were assuming something about the target consumer and his habits that are no longer true. So like the way in which people spend their time or what they do if they had the chance of. But I would probably like challenge everyone to share what we've done like more productively from a personal point of view during this pandemic. Instead, of course, we read like a ton of books, we spend time with families, but all like the good thing that we had in mind before this outbreak, probably, I mean, not all of us have achieved that.
Yeah. Strangely, it turns out I don't actually need a pair of handmade Italian shoes. So, Sergio, what's the thing that you think is no longer kind of like, you know, part of the assumption base?
And actually, it's one of the topics that we never talked too much here. And I think you mentioned that, you know, Oculus, I think just a couple of people have an Oculus device and I don't have it. AR and VR, virtual reality, there was a huge friction on that. And I have seen a lot of deep tech, you know, with research-based companies popping up here in Montreal, but with the friction that not being able to have the sales cycles at the enterprise level because corporations were reluctant to use that technology as a training. And now I'm checking a lot on VR, by the way. Why? Because through COVID, at least in the aerospace sector in Montreal, you know, with factories like Mitsubishi and Bombardier building the aircrafts, or Rolls-Royce and Pratt & Whitney building the gas turbine engines, these guys were training people globally. So people from all around the world were coming to Montreal to be trained on how to do the repairing, the overhauling of the gas turbine engine from Rolls-Royce and Pratt. And the same thing for the maintenance of the aircrafts. Now, these guys in the last 2-3 months, they were desperate to test this kind of new technology on VR to train virtually everyone globally. And just asking whatever price, just put the technology we want to test it. And that was a big shift. So as an investor from AIARVR, it's a nice, maybe for gaming, you know, for tourist travel, whatever. Now it's a manufacturing necessity. So my big question would be, after COVID, with this kind of virtual training using AIARVR will remain, or we're gonna move shipping people to Montreal again to train physically? So very interesting times.
It is interesting. And just on a personal note, so I now, for the next 3 days, I have 7, and I kid you not, 7 meetings scheduled in VR, but not in like a collaboration thing, but actually in the Top Golf Pro Putt app, where we're going to actually have multiplayer and we play golf and talk. Because the social interaction there of let's talk for a minute or two, and now I have to do something, and then you have to do something, and then we go to the next hole, and it causes this natural break in the conversation to kind of think about things in the next sentence. It's incredible. And so I kid you not, I have 7 different meetings in the next 3 days that are all going to happen on the golf course because people are tired of talking on Zoom. Yeah, Ingrid, you were going to say?
Wanted to mention, it's intriguing to me that none of us mentioned video gaming industry, which has heavy AR and VR utilization. I've seen tremendous uptick in that, and already they were at the forefront of this anyway. And then the arts and education, I think we might see over the next decade a dramatic disruption in the educational landscape, as well as for the typical venues that now have all been shut down. So I think XR might be the solution to not completely lose that industry.
All right, Chris, you've been waiting patiently. So what's the assumption that is no longer true?
Well, it's pretty closely related to what we were just talking about, the virtual golf, and also with Francesco's response. But I would say the sacred cow that you really need to physically go to a conference to get value out of it. Some of these virtual conference platforms, which have breakout rooms and chat roulette and AI predictive introductions, I find are actually a better experience than a physical conference, not to mention you don't need to travel there and things like that.
Great. All right, Gary, I saved you for last because I know you got something big for us, man. What do you got?
Well, I mean, look at what's happened. So the contact that you need to have, it's just like you said, Richard, about the golf. People want to connect and touch base. So the companies that I'm really passionate about, I mean, think about how much different the world is. We can't have those lunches together. We can't fly. I can't even go from Palm Beach to my home in Silicon Valley now, so I'm way late here. We need that personal contact. Systems that allow us to get closer to one another and do relationship develop are critically important. As I said, the remote workforce management is here. It was happening anyhow. It's here to stay. Our lives have changed. We weren't before concerned, you know, if we went into a store and somebody tried to check your temperature, you'd call the police. Now that the situation's about safety, we have to wear masks to go outside. If you would have told me that 6 months ago, I would say that, you know, you're invading my rights. But now it's changed because of safety. So let's think about ways we can incorporate that, and it's going to happen for the future, how we can incorporate that and make money and make the world a little bit better place. It's changed. We're willing to give something up so we don't die.
Absolutely. In fact, I would say one of the insights or one of the assumptions that I think is no longer true is that certainly people of our generation and perhaps a bit older before this, when someone who's a little younger would say a sentence like World of Warcraft friends are real friends, we'd all kind of roll our eyes and go, yeah, back in the basement, kid, right? But the thing, of course, is that we're seeing is that actually, yes, you know, I mean, interacting with people at a distance through these mechanisms, whether it's direct like this or via proxies and avatars in games and things like that, is like, yeah, actually, you know, these friends are friends.
Think about it. Bicycle sales are going through the roof. They can't stock enough bikes. Electric bikes, which were slow to start, have taken off like crazy. Monopoly, board games, simple life has come back in a way we've gone back 25 years. It's simple again. And we have a lot more time to spend with our families. How many of us are here? I got my dog is alongside of me. I did that 6 months. Yeah, see?
Lola's my co-pilot. She usually makes an appearance in these things. So yeah.
Exactly. I mean, we've changed in a way. It's really, really good because we're much more efficient. And I got to tell you, a lot of people are really happy because they're doing the things they want.
Yes. So on that cheerful note, I'd like to first of all thank all of you. You know, we're certainly in a new era. You're all at the very much at the forefront of this, of helping to make it happen and to shape it. I'd like to thank Elena for bringing it together. And without further ado, I'm going to hand it back to her. And then basically what we're going to see is the future as a group of very enthusiastic people kind of tell us about how they want to change the world. Elena, I'll hand it over to you.
Thank you very much, Richard, for great moderation. Thank you very much, dear panelists.